believe, Peter, you're going to start.
There we go.
Yeah, well, guys, I'll start 2 words in Danish, and then we'll go on to English. Så velkommen alle sammen til vores månedlige live webinar. Som sædvanligt har vi en af de dygtige tradere på fra USA, den er gang fra Canada, til at fortælle os lidt om, hvordan vi har succes. Så derfor så fortsætter vi på engelsk. So today we have Tracy Ball with us from Alt US. And then you might all think that she's actually sitting in the US, but she's not. She's Canadian and sitting in Canada somewhere. So, you know, temperature-wise and so on, we are much more alike. And she would appreciate when we talk about right now, I'm in the car, it's raining and it's black outside. I'm guessing it's the same thing in Canada. Tracy is one of the elite traders from the US, or from the US side. She is a very successful day trader and swing trader, but she's also the host or hostess of the Elevated Trader podcast, and she was the host of the Pivot podcast. And I know that many of you have been, as I have, binge listening to the Pivot podcast and also the Elevated Trader podcast, as they are awesome material that covers so much trading wise. So Tracy, could you tell us a little about yourself, how you got into trading, and a little about your trading style?
Absolutely. And first of all, thank you, Peter. It's great to be here. Thank you for the invite. And I also thank you for all the support that you give us in our social media, because you're liking everything that we do out there, and I love it. And it's greatly appreciated. So thank you. Kristen also says thank you. So yeah, I live in Canada, and right now actually it's a nice day. I just came back from a ride with the dog. I take my dog on a bike ride pretty much after the noon period of trading starts with the US, and it's cool. That's why I'm wearing a sweater. I live on the West Coast, and I've been here probably about a year. And prior to that, I was in northern Alberta, and it was significantly colder up there with a lot more snow and 10 months worth of winter. So I'm glad to be in what I would consider the California of Canada. It's the nicest place on earth.
Great.
Yeah. And as far as my trading, getting started, well, that started in Alberta. So I am a tradesperson by trade. I was trained in the electrical field. I have a math degree. And during my construction business, I ended up with an injury to my right knee that I had a blood clot in there that rendered me incapable of walking for over a year and a half. I was in a wheelchair for 6 months, and then I was on a cane for another year and a half to rebuild the muscle and rebuild the movement in my leg, because I had lost all mobility from it. I was down to about 98% of lock, where my knee was locked. I just couldn't bend it. And I was, for the first time in my life, stuck sitting at home without an income. Now, thankfully, I have a husband, and we had his portion of the income, and I was able to transition from being in the field to working the books and feeling like I was adding value. But those are all non-paid, non-billable hours, if for anybody that really understands or owns a business, and you're doing all the paperwork that goes along with it. So I felt very vulnerable, and it was a vulnerable time in our relationship as well, because I hadn't been in that place where I could actually feel like I was adding value. And I remember sitting on the couch, laying on the couch, I should say, and feeling kind of sorry for myself, feeling bad about myself. And an ad came on television, and my husband said, you know, you should do this. You should look into that. It had to do with cryptocurrency and trading. And he said, I think you'd be really good at it. And he saw something in me that I didn't see in myself. And from there, I just dove straight into the education. I tried everything to find a proper education on this, and I couldn't find it. So I once again went through the University of YouTube and pieced things together. And I've been doing this for probably about 7 years now. And 6 years have been completely full time. But the 7 years it's been just me learning and putting everything that I can do, putting it all together and coming up with where I am. I am always learning. Now, Peter, you talk about me being a successful trader and an elite trader. And in my opinion, I don't believe that anyone gets there. They're always on a journey. And that's one of the things that I hold dear, is that there's no finish line for me. There's no target for me as far as the trader is concerned. I am going to be spending the rest of my life learning, developing, practicing, becoming better, becoming more efficient, just increasing my wealth of knowledge. And that's going to continually drive me to become better, allow me to reach bigger goals, et cetera, et cetera. It's just all scalable. And I think that that is really important for traders, especially new traders coming into this, is to recognize that you have to stay open. You have to stay okay and welcome learning. Embrace failure, embrace mistakes, learn from it. If you think that you just have to put in 2 years and then you're done and it's going to be a cakewalk, you're wrong. And that might be the case for some people. They can just do that and then settle in. But that to me is, I think you're missing out on the bigger picture. But yeah.
Yeah, no, I agree. That's also my experience, that, if you just settle down and stop learning, you get stuck.
Exactly. Yeah, exactly. And that's one of the reasons that Kristen and I started the Elevated Trader podcast, which is solely about elevating ourselves, because we really believe that in order to become the best traders that we can be, we have to continually grow as humans. And you grow as humans through gaining knowledge and then actually actively enacting that knowledge. And so that's what our podcast is about. And that's why I left the Pivot podcast, so I could focus more of my energy on that, because I think it's just where my heart's at. Yeah.
I think it's very important what you touched on there, because I think our experience this year is that the psychology has really hit us in the face. Whereas 2020, 2021 was fairly easy years. Psychology didn't play in as much. Making money on the market was fairly easy. Especially if you add a little luck. And then this year came in, and I think we all, no matter how successful we've been struggling, and we've been feeling the psychological side of things. And I think many of the books that you review in the Elevated Trader podcast deals with the psychology side of things. So that's one of the things I really appreciate, to getting pointers to books that I need to read to improve. Perfect.
No, and that's great. That's one of the reasons that I love the volume profile, because the markets, they're a language. And just like reading a book, you have to take the words that are in the book into context with the story. Otherwise, you can pull something out and it doesn't mean what it was meant to mean. And the markets are no different. The volume profile gives me context into what I'm seeing in the markets. And that makes it very usable, whether you're long, short, whether you're in a bull market, bear market, sideways market, it doesn't really matter. The market exists. And if you are able to understand the language and you can read what is being said, it's going to make your life so much easier. And I think one of the biggest mistakes that traders make is trying to, I guess, use technical analysis without taking context into place. And it gets people into a state of confusion and the chaos. And I find that, like I said, volume profile, when you get that context, it takes that confusion out. How many people have used the term chop? Type of one in the chat. Yeah, if you guys have used the word chop, you understand what chop means to you, throw a 1 in the chat, because I've heard it. Yeah, I've heard many people say chop. Okay, now I view the markets completely different. I view the markets in terms of value. And when you are looking at any kind of a financial instrument, it doesn't matter whether we're talking real estate or we're talking goods and service or we're talking the stock market, it is all dictated by supply and demand. And when supply and demand are equal, you're in a state of balance. And that just means you have enough demand to meet the supply and the supply enough to meet the demand. And for me, when you see quote unquote chop, that's actually a state of balance. That's a state of where supply and demand, there's enough of everything to go around. And the traders that are interacting in that particular market are okay to be doing transactions within that balanced state. And the market spends the majority of its time actually inside of a balanced state. They don't spend the majority of their time outside in price discovery. And if you understand how to read market profile and volume profile and all of that stuff, you start to get that bigger picture and realize that as the markets are all very fractal, that the small little intraday moves that appear to be bullish are actually just balanced moves inside of an intermediate balance area, or the intermediate swings are just little swings inside of a longer term balancing structure. So when you start to get the bigger picture, that chaos gets removed and you can start to relax into what you're doing, and it sets you up for some better successful trades.
That makes a lot of sense. That's a
absolutely.
lot of sense. So me included, but I think I can speak for everyone else here also. The volume profile is new to us. So could you tell us a little more about the volume profile and how you use it in your trading?
Yeah, let me actually share my screen. So let me grab this, share my screen. Okay, can everybody see my chart?
Yep.
My charts? Yep. Okay. All right, so just so you guys know kind of my setup, I actually have 4 monitors in my setup. And when I trade, I have 3 charts open here. I have 4 on another chart, and it's just different time frames. So what I've got here is this is normally a 1 minute. I just switched it to a 3 minute so I could show something earlier, but this one's a 1 minute. This one here is a 3 minute. And this one here is a 30 minute, but notice there's no candles on it.
Right.
And yeah, so this is what's called a market profile. And I'll explain that in a second. So there's 2 types of profiles. There's market profile and there's volume profile. This one here on the right is a market profile. The blue and pink one that you see on this middle one is a volume profile. Now, what it does is the market profile notes the amount of time that price spent at a specific price level. Okay, that's the amount of time that price spent at a specific price level. So if we were to scroll out just a little bit, I don't know if I can do scroll out anymore. I can't. You could see that this area right here is the thickest part of this profile. That means that at 371.24 on the SPY, that's been the price that's where this session has spent the majority of the time. Okay. Now, if you go to a volume profile, the volume measures the amount of actual transactions that have taken place at a specific price point. So that's the volume that has taken place at a specific price point.
Right.
So one is volume by time, price by time, and the other one's volume by time. And then, of course, you've got your volume below, which is volume by time measured horizontally, which doesn't tell you the price. It just tells you how much has taken place in that particular session.
Yeah,
now,
and that's the one that everyone, most of us has been using for a while, right?
Right. So if we just focus on the volume profile, I like to say gives you the where, because those areas where you have high concentration of transactions, those are your true areas of support and resistance. Those are going to be the areas that are really high to recognize. If you had a lot of transactions there before, then when price revisits that area, you can expect either a slowdown a stop and reversal, or a slowdown and continuation. And they're really easy to spot. So now that's really the idea of how I use the volume profile, is recognizing where I am inside of the trend, or inside of the day, or inside of a current balancing area, whatever it might be. I like to see where those levels are. So if you guys are, yeah, go ahead.
It's a finer instrument to measure your support and resistance.
Absolutely. Absolutely. Right. Yep. Absolutely. So if we take a look at this candle right here, let me just make it into one screen for a second. So if we just take a look at this candle right here, right? You can see that this had a higher amount of volume compared to the rest of the volume, right?
Right.
But you can also see that we had a volume spike in this particular area right in here. So out of this candle, where was the majority of the volume? It was most likely down in this particular area at that 369.24 that moved this. So it wasn't up here, it was down here. This is the best place to get. So if you were looking at this particular candle, where's a good place to buy? Back down in this, if it's retesting, right? Back down this area. Where did this candle retest to? Right to here, right?
That is smart.
So yeah, let's take if you guys are okay with this, what I'll do is I'll go through my entire analysis of the SPY this morning and how I traded the SPY.
Please do. Please do. We would love that.
Okay. All right. So what I'm going to do is I'm going to start on a daily chart, and I'm going to remove today's candle. All right. So
while you do that, everyone, write your questions for Tracy in Slack. Oh, sorry, not in Slack, in the chat pane. And if you're not comfortable doing it in English, write it in Danish, and Henrik will translate it and read it up.
Okay.
Please go ahead, Tracy.
Perfect. All right. So if you look at the SPY, you can clearly see that in this particular area, we have been consolidating. We kind of came down to a low, we bounced, hit a high, came down to that low. We did break the low and then came back up, but we've got kind of a consolidation that's going on right here. So what I do when I get these consolidations is I throw on what's called a fixed range profile. And anyone that uses TradingView, whether you have the free version or whether you have a paid version, you have access to the fixed range. It's over in your position tool. If you click on that, go down to the bottom, you can see fixed range profile. And then I just grab it and I put it into this particular location. Now, what that does is it's created what I would call, this is a profile, and it's given me an idea of where value has been established inside of this range. Now, when I say value is the point where 70% of all the transactions have taken place. That's the place that this group of traders inside of this session that I'm looking at, that group of traders have been okay. They've agreed to the price. They like the pricing in there, and it's staying within that, it's fluctuating within that value zone. So if you consider the cost of apples, for example, if you go to a grocery store, apples might be 57 cents a pound. At one store, they might be 80 cents a pound. At another store, they might be 20 cents a pound at another store. But you're going to get a range of where apples comfortably are being produced and sold to the public, and the public agrees on that price. And if they don't agree, then the apples start to rot, or they just can't keep them in stock. And really that area where you get that balance, that's that value area. Does everyone understand value so far? What I'm talking about with that? Just type a 2 if you understand, if you're following me so far. You guys good? Okay, type a 2. Perfect. Okay. All right. So this yellow zone right here is the value area of this particular consolidation. So what I do is I marked the value area low, the value area high, and I put in here, it's a composite value area low, value area high, value area low. And this point of control, which is the point within this entire profile where the most volume takes place, that is this point of control right here. Okay. Now, again, this is a composite, so it's made up of all of these different days, not just one day. Inside of each individual days, you have additional profiles, but I'm looking at the bigger picture at the moment. Okay. So this morning, when I look at SPY, I see that it's gapping up. Well, where is it gapping up? You can see that the pre-market high sitting at this white line right here, and the pre-market low was right there. So we were gapping up into that upper part of that intermediate zone, that intermediate consolidation. So if you notice on this profile, you can see that there is a cluster of volume right in this area right here. So I know that we have another consolidation zone up in this area, and we're gapping into it. So what I did is I looked at these three candles that made up this volume right here, these three candles, and I threw on another fixed profile. So here's the other fixed profile right here. You can see it. And then what I did is I marked the composite value high and composite value low. This is the value area for these three candles. That's it. So now I can start getting a bigger picture. I can start thinking about what I want to do. I've got a composite. I've got a intermediate composite zone that's down in the bottom. We've gapped up to the higher channel. So now one of a few things are going to happen. We can break out of this balancing zone, which is a possibility. But in order to do that, we have to actually break out of this point of control and this value area, and then break the highs of the day, plus the 10 EMA on the daily is there. There's a lot of overhead resistance, but it is still possible. So I would be looking to go long. If we get up into this area, I'd be bullish for more of a swing trade even than just a day trade. But if we got above there on a day trade, I would be looking to play this very long and watching it to see if it would hold that area. Okay. So that's option number one. Option number two is we were gapping right and holding right inside of the value low of this little consolidation. So the other possibility, and this is what I was watching for right off the get-go, is are we staying inside of value? Are we accepting the value up in this area? And if we are accepting the value in this area, then there is a very high probability that we would retest the point of control of that value area. Okay. So that's my trade idea number two. My trade idea number three is if we don't hold this value area and we get rejected from this level, then my expectation is 100% chance that we are going to retest the value high of this lower composite area. Okay. So this morning, what I did is I jumped into, let's just go into a 1 minute chart, because I use a 1 minute as a trigger and I use a 3 minute just to manage my stops. So if we just move forward on this, because again, I'm not playing the candles. I'm just playing the level. I'm looking to see if the level is succeeding, if it's successfully holding, or if it's failing. And if it's failing, I'm going to be shorting that level. If it's holding, then I'm going to look for an opportunity to get long. And I'm going to get in at a level that I like, where I'm comfortable, where I can control my risk.
Yeah.
All right. So the first candle comes in, and remember, here's our composite value area low. Okay. So we are holding below the VWAP. We're holding below the pre-market high. We're holding with selling tails coming in here. So I'm thinking this is really struggling right off the bat to go long. The other thing that I'm thinking is the volume down here is really, really low. We're not getting a lot of excitement up in this area. Okay. So the selling up here that I'm seeing is more likely to be profitable traders, long liquidation. So individuals that are looking to exit their trades, not new buyers getting in. So that's what I'm seeing. I'm not seeing any new buyers that are looking to take this higher, which is telling me again that there's a good chance we're going to fail out of this value area. Okay. Because in order for us to get value, we have to have new people accepting this area and wanting to get in, not wanting to get out. All right. So these candles, you're getting your topping tails. Those are all in conjunction with the context that I already have, this is supporting my theories and my trade ideas that I have. Okay. It's not supporting to go long. It's supporting to go short at the moment. So the next candle comes in and we break below the composite value low. So at this point, what I decided to do is I wanted to actually short a retest of the point of control. And when we come back up into this area here, this is where mistake number one. So I normally trade AMD. Today I decided I'm going to trade the SPY. And one of the reasons is because I trade with Kristen every morning. She trades the futures and it would be easier for us to be trading the same thing. And I just wanted to do that. So I switched over to SPY and somehow I managed in my broker to switch my account to my TFSA account, which is a registered account. So
Right.
as soon as I entered my short, which was right in this area here, I get a rejection. My broker rejected it. Couldn't figure out why. Then I had to actually get my glasses and read the rejection note. And the rejection note said that you can't short a registered fund, which I know, but I didn't realize that my account had switched over to my registered account. So I had to quickly change my account back to my margin account and then re-enter my trade. Of course, it doesn't fill. By the time I get there, this candle had already happened. So I'm not getting filled at this level at all. And that's the level that I wanted to get in originally. I didn't get into it. So I just had to watch and see what happens. These three candles, remember, these are a minute candle. By the time I got through all this rigmarole and got my order set, this had already taken place and I did not get filled. And there we go. This starts to break down. And I'm thinking, well, I missed my opportunity. So I thought, well, let's see if it retests the VWAP. We'll give it some more time and see if we can't get that. And then this candle comes in. And at that point, I was extremely upset, feeling like, great, one mistake, I missed my trade. At this point, I needed to get up from the computer and do a mindset reset because I knew that I was rattled at that point by losing out on this first trade. And it was a mistake. I needed to just clear my head and recover and change my mindset. So I got up, walked away, took a few deep breaths, came back, joked around with Kristen for a little bit and was just saying, oh, well, I guess I'll either sit out and watch this thing hit my target or I'll just be patient. So I continued to be patient and it started to retest up to the VWAP here. And I was thinking, okay, that's good. I'll try a test off of this level. So what I wanted to do was get in right here. And basically I wanted a retest of that composite value area low and get into there. And of course, it missed me the first time. And the second time we come in here and I realized we're not going to hit this level most likely. So I ended up taking, I think it was this one here, finally. And there I get filled. No, it wasn't. I did get filled right here. This was the area. So I got filled right here off of this composite low. Okay. And I didn't enter the trade. I didn't leave it there. I waited until we had a close above that VWAP and then I took the trade. So this is the candle that I ended up getting filled on. And from there, I can control my risk very quickly because I know, first of all, the point of control has shifted down. I know that we have the composite value area low here, which means that I'm expecting value to stay below this level. I'm expecting price to stay below this value level. I don't want to see it accepted at this point. If this has any chance now of fulfilling my theory, which was we got rejected from value, the expectation is going to retest this other value area, then I can't have it go back into value. If it does, then this trade is wrong. And we're actually going to go retest that point of control. So right off the bat, I'm able to control my risk very, very quickly. I don't do anything at this point.
Just to clarify, should the stock or the price rise to that area, would you then just close your trade, or how would you manage that?
Sorry, repeat the question.
should the price action continue into that area where you said, okay, if we get up here, the analysis is wrong, would you just exit your trade, or how would you manage it?
Yeah, basically, if I get above this level at all, I'm exiting the trade. Yeah. So as soon as if I see price get back above the 10 EMA or above the VWAP, I'm basically going to move my stop immediately to here. And I'll get out. And if it just wicks out and gets me back, I'll just get back in, but it's a small, tiny loss. It shouldn't go back up there now. It's already tested the level and it failed again. So here's the test of the VWAP. If this is a successful trade, it should work immediately. All right. So right off the bat, we get another retest of the VWAP, but we still close below the 10 EMA. Okay, great. No big deal. I'm looking to take a partial at the mid. So I have these pivots. I just use these for partials. That's all. Just I feel more comfortable taking a little bit off. I trade better when I'm collecting some of my profits instead of holding it until it hits my target. I just trade better that way. So I took my first partial, I actually took right here where it says partial, and that was at the value, the current value low. I took a partial there just to take a little bit off the table. And right there. So I hit my first partial, and then my next partial, I ended up taking as it broke the low of day. And again, I'm watching these candles to see if we get a close back above the 10 EMA, but you can see that it's holding. And the point of control just shifted down. Now, again, this point of control is extremely important. And I'm watching the point of control because the point of control is the place, the price where most volume has taken place in that session. And if you have a move to the downside or a move to the upside, and you have that point of control shifting with you, that is saying that you are getting more and more volume coming in at each of those locations, more than the last location. And everyone knows that if you have more volume coming in at a new price or a new location, you're getting price acceptance. This is the same as having a bidding war in the real estate market. I don't know if you guys get those over there, but we do. And that's where a lot of people start to outbid each other because everyone wants the same thing and there just isn't enough. So what this is telling me that we are moving down, it is saying we do not have enough demand to meet the supply. There's a lot of supply that needs to get rid of. We need to get a lot of supply gone. So again, thinking of retail, if you're at a blowout sale or you get these 50% off markdown or clear out sales, whatever they might be, this is where you have retailers that have an excess of supply and they need to get rid of that supply so they have more of a balance of supply and demand. And everybody here knows that when they put it on sale, they're marking it down. They're putting it at a discounted price. Same happens with the stock market. If you have too much supply, you have to reduce the price to get rid of it. And that's really the way that the market moves. And if you can think of it in terms of supply and demand and balance and imbalance, and the market always wanting to be within balance, then you know that when you have an imbalance, so an excess of supply or an abundance of demand, the market has to move in order to find a place where it can then be in balance, just like retail. Does that make sense to everybody? Yeah, type of one, absolutely. Okay, good. Are you guys liking this? Does this make you guys good with this so far? Type a 6 in the chat if you guys are loving this. This is what you guys want to, yeah? Okay, cool. Awesome. All right, so this is what I'm looking at. I'm looking at an excess of supply, not enough demand. And that's really what I'm thinking. So that's one of the other reasons that I am supporting the decision that this is going to go back down into another value area where there is demand. All right. So the market continues to drive prices lower. So I get another partial right in that area and price continues to drop. All right. So now right in, so after I get a close above the 10. So right here, So right in this area here, when I get a close back above the 10, I was actually looking at my market profile, and my market profile was showing me that right in this area here, I had what are called singles. These are single prints. Now, what single prints mean? They mean that there is the price has only been visited once during that time frame. It didn't uh, price didn't spend a lot of time at that particular point. It just visited during the one session, and it has not revisited during another session. So we end up with this volume cluster that's under here, but price never got revisited during that 30-minute session up in this area here. Now, singles don't normally, you can't really use them until the session's more mature. And this is where my second mistake came in today. I know that, but I think I was still a little rattled from my first mistake where I missed my perfect trade that I wanted to take this morning. And so I started to have that fear kind of set in, and I don't really, maybe I'm doubting myself. There was a bunch of stuff that started to come in, and that plays with mindset, being able to recognize that and change that and snap out of it really quickly and make sure that you're sticking to rational decisions. So I looked at the singles thinking, I'll just move my stop there. That's normally a good place to put your stop, is when you have some singles where price hasn't been visited there a lot. It's a sign that people don't want to interact there, but not this early in the session. And I also then asked myself, the point of control is way up here still. It has not come down. So where does price have to go in order to accumulate, to drag that point of control down in order for it to continue to trend lower? And again, I'm looking at this volume node. Whoops. Sorry, just give me a second. Give me this right here. There we go. I'm looking at this volume node right in here as the area, the next logical place for the point of control to shift to. So if the point of control is going to shift down, I'm expecting price to come back up into this area, spend a little bit more time there so that it can accumulate enough volume so that the point of control can shift down. If it doesn't accumulate here and pull back, then it makes sense that this would actually go all the way back up to this prior point of control, because we did not get price acceptance on the way down. So this was all going through my head at the time. I knew that price was going to have to go and revisit this area. I moved my stop down. It was too tight. My stop should have stayed above this volume cluster right here and given room for this to accumulate down in here. And I didn't. So what ends up happening is I move my stop down to this location right here. And guess what happens? Right there, I get wicked out. Okay. Sorry, and I had my stop actually. Yeah, I had my stop right here because I literally got wicked out. Stop was right there. It wasn't enough room. It was too tight. And price continues to drop. There's the point of control. And remember, I said that's where the point of control was going to go if it spent enough time here. And that's exactly where it went. So I pay attention to that as well. And that helps me formulate whether or not this is working or not working. I didn't listen to myself, move my stop, and that yielded me a 0.8 R trade after my partials were taken. And wouldn't you know it, if the trade just continued to work, and boom, there's the target. Okay, that's where I wanted to get out for take all. It did retest the prior day high, and then from there, it bounced all the way back. And that's where we currently, there we go, right in here. So that was the trade. That was a 3R trade. I exchanged a 3R trade for a 0.8R trade due to a couple trading mistakes that happened, starting off with an early mistake this morning by not double checking. I was rushing this morning. I didn't give myself enough time to transition from AMD to the SPY. So I was doing a lot of this analysis with 5 minutes left before market open. That puts me in a position where I was dangerous. So I should not have done that. I needed to be here sooner, ready to go, and I wasn't. So that was mistake number one. Mistake number two, like I said, I was still affected by mistake number one. But from there, I just decided I'm not trading for the rest of the day because I've made a couple mental errors. I need to just reset altogether. And I didn't jump into this. I stepped away from the market and came back, took the dog for a walk, came back and saw that things had recovered or hit my target and then started to recover. And that's really how I build context, how I use the volume profile. There is so much involved in the volume profile and market profile. I take a good 8 weeks in my mentorship to teach this, or there's 6 classes. That's what I think it was 12 hours of content. And I still don't even come through with everything that I know about the volume profile. So it's really hard for me to encapsulate all of that into one little webinar that we're doing right now. But I hope that gives you kind of an idea of how you can start to really investigate this and dive into it a little bit more, because I think it makes a huge difference between whether you are, whether you stay in a trade, whether you get out of a trade, whether you hold, whether you get out early, whether you take your targets, or whether you just take partials. This is the key. It's the key to my success. It's the key to, I think, a lot of trader success. And unfortunately, a lot of traders do not use this with stocks. It's very common in futures, but not common in stocks. And I don't understand why, because it's volume. There's volume exists inside of any financial instrument. So why not take advantage of something that is clearly a benefit, right?
This is really interesting. I know a few people have asked in the chat if you could show us, like you did with the fixed range volume profile, where we can find that. Could you show us the VWAP as well?
So the VWAP is this blue
yeah,
line right
but
here.
could you show us how to find the indicator so we can add it ourselves?
Oh, gotcha. Okay, so if you go up to indicators, metrics, and strategies, just type on or click on it, and then just type in VWAP. And under the technicals, should be under, yeah, right here. So under the technicals, it says volume weighted average price. You just click on that. That's the one that's built in with TradingView. And then one of the things that I do, because you'll see these pink bands, you'll see these little pink bands. I actually do that with the volume profile. So if you go into the volume profile settings, upper band, lower band, and
cool.
What I find is when you're trending, volume or the price will get outside of these bands, but when it starts to, you expect it to pull back to the mean, which is the VWAP, and that's exactly what it does here. Pulls back to that mean, pulls out of that, and then you get a pullback. Pulls out, you end up getting a pullback. And so I start to really get cautious or expecting a pullback when it starts to pull out of those bands. But normally you can guarantee that it's not going to close back above the VWAP if it is trending. It just won't happen. You're in if you're getting a cross above or below the VWAP, it's not trending, it's consolidating. It's within a range that you might not recognize, and it might appear to be trending in one direction or another on a shorter term, but it's really not doing that. And a lot of traders confuse that for chop when it's really just imbalance on a bigger time frame. Okay. Is that good?
That's great. That's great. Simon is asking where you learned this trading volume like this, and for how long before you were profitable?
So I have been doing this for, like I said, 7 years, but I started in futures six years ago. And that's where I was introduced to market profile and volume profile. And I stopped trading futures only because I needed to trade our bigger portfolio with our stocks. I need to manage that too. And I found it too hard working from 2 different platforms during the day and day trade both. It was just too difficult for me. So I had to choose. And because I had obligations to take care of the shares, I closed out my futures account and moved over to shares. So I stopped using the volume profile and the market profile because I had to figure out how to get the tools, first of all, to work within stocks, because a lot of brokers don't have this kind of information available to them. TradingView has made some significant changes to their volume profile, which is great. I've been asking them to do this for years, and they're doing it. So it's starting to get so much easier to use TradingView. But I would say that I have been using this strategy or it's not a strategy. I've been using this indicator, tool, technique for the following six years for sure. And I've really mastered it probably in the last couple of years. I've been profitable pretty much for the last 5 years. And when I say profitable, I mean that I never blew out account and I wasn't losing. Even when I was starting out, I would gain a little bit and I would win a little bit and I would lose a little bit and then I would gain a little bit, but I was kind of hovering. I was preserving our capital and learning at the same time. I have a very low risk tolerance compared to some people. So I didn't want to risk losing our capital. So I was playing with a $50 R, a $5 R, a $10 R at times, and really just being very careful. So the bulk of any losses that I was incurring were coming from fees, which were pretty minimal. But consistently profitable, that's been about the last 4 years where I've been consistently profitable every single month. I've not had a losing month. I'm profitable every single month, sometimes not by much, but I've been profitable every single month, and every single year I've been growing the account. And yeah, I've been relying on the volume profile. Now, I ended the year really well last year and then started the beginning of this year, and I started to struggle at the beginning of this year, but it wasn't because of the volume profile. It was because I was bringing out a new course, the volume profile course that I'm sure you've seen, Peter. I'm sure you've seen it available at the RLT classes, but I was coming out with that volume profile class and I felt like I had to come up with some rule type strategies that I could give to traders, because I felt like that's what you guys needed or wanted, and it doesn't work. It's not the way that I trade. It's not the way that I can keep my success. It's not the way that it creates too much confusion for me. So I was going down a rabbit hole, and that kind of threw me for a little bit of a challenge for the beginning of the year. And I had to, again, reset and stop doing that and then get back to the way that I normally trade with the profile. And as soon as I did that, it was an instantaneous switch back to no frustration. I was getting very frustrated with the trading, and it's because I wasn't looking at the context. I wasn't reading the volume profile. I wasn't using the volume profile. I was using signals and indicators to tell me how to trade, and that's just not, it just doesn't work. This is not a trading signal. It is a context, and you really have to read the book. There's no shortcuts to be able to read that context. It doesn't mean I'm going to be right all the time, but it's going to be more consistent. I have a very successful win rate, or a high win rate, because of this, and I can keep my losses very, very small. And it's good on any time frame. And so I hope that answers your question. But I learned this by watching a lot of videos, reading a lot of books, and putting it all together. I've back traded thousands and thousands of hours, and just the experience. I collect charts. I collect them and I create data, and I review those charts. I can open up, just go in here for a second. And here, let me show you this for a second, because this is something that I do every day too. So every single day I go through and I create one of these. So this is the date, and it's a pre-market check-in, and I do a physical check-in. So I explain how I'm feeling, what did I sleep like, what am I noticing? And the key to this is really, first of all, I can track it. So if I had a bad day, I can go back and see, yeah, well, there's some patterns here that are saying, hey, if you're doing this or doing that, or you keep having a bad day every time you trade with a headache or whatever it might be. But it's also, the minute you ask these questions, you bring that self-awareness up front. And right off the bat, that sets you off to be more successful, because you are not ignoring what your body and your mind are telling you. So I do a physical check-in to see how I'm feeling. I then do an emotional check-in, and I have a pendulum. If you guys follow the podcast, you guys will understand what that is. But again, the idea isn't about necessarily whether you believe in a pendulum or not. It's about bringing those questions and that mindset forward, so you know where you are, where you stand, how you're feeling, and how you're grounded. And that's what it's really about. So I ask these questions. Do I have, the right mindset to trade today? Do I have any trapped emotions that need to be cleared before I trade today? Are there any other questions that I need to ask? And if the answer is yes, then, am I ready to trade the SPY today? And the answer is yes. And then I just go through that process. Then I go through a market analysis, and I wrote down my upcoming news, because news can affect the market. Now, I don't care what the news is. I don't trade the news. All I want to know is there news that's going to be taking place? And if there's certain things that I know might take place. So if I've got something that's red on this list, I know it's going to have a huge impact on the market. That could explain why we're just in balance. We're in balance. Nobody wants to make a move. No, there's no excess demand. There's no excess supply. We're just comfortable sitting there because they're waiting to find out what might happen. And I'm okay with that. I know how to trade that. Then I go through my analysis. I give up a couple trade ideas of what I want to do. And then I do a post-market analysis. What did I do correctly? What do I need to learn today? And do I have any follow-up action required? And then what my results are. I keep track of this every single day. I make a new one. Okay. Now what I want to show you though, is I have this here. So I collect charts. I told you I collect charts. I've got 15-minute charts. I've got 1-minute charts. I got 2-minute charts. I got tons of charts. I mean, these go back to 2021 right here in this particular book. But I got tons of charts, and I have these charts. I keep them. Here's 2017. I go back. It's a 30-minute chart, and I've got my value areas, my volume profiles. I've got my IBs, and I practice all of these. I look at these. I collect data on them, and I do this. I have charts, books full of these charts with statistics and probabilities and all of that. So that's how I've learned it. And I've taken all of that knowledge, and then I mentor students. I try to teach them the same thing that I know. And my goal at some point, I just don't know when I'm going to do it, but I'd like to write a book that encompasses all of this information as well. So that's pretty much it. So yeah. Any questions?
That's amazing. I think we're blown away here, and you need to tell us when this book arrives. I think a lot of us are interested. Yeah, guys, if you have any questions, make sure to ask them in the chat. And yeah, we'll see. Simon Rhodes is asking if you get stressed trading on the 1-minute candles.
No, because again, I'm not trading the candle. I'm trading the level. So all the candles are doing is telling me, is this holding, or is it failing? So I'm just watching the price action. And just because it's happening in a 1 minute, this move before I entered the trade, I mean, it took 1, 2, 3, before I actually entered the trade. I mean, that's 39 minutes that went by. So no, I don't get stressed. I see the price action because, again, these 1-minute candles, you see these big drops, you see these moves. When you're thinking in context and you're thinking in levels, that's all minutia. It's just noise, because that the market is going to breathe in and breathe out. It's going to breathe in and breathe out. There's going to be fluctuations where it goes up and goes down. That's just the way it is. It's moving inside of a range, and it's going up, it's going down, it's going up, it's going down. I expect all of that. So all I care about is what happens when it gets to the levels that I've acknowledged are important to me. And I've recognized those levels based on certain criteria on the profile and on consolidations and on the bigger picture. So I'm using all of that to really get a feel for what's happening. And like I said, anything that happens in between is just noise. And when you focus on the little tiny pieces of the letters in a book, your reading and your comprehension just go down. You need to focus on the sentences. You need to focus on, you first start with the letters, and then you start with the words, and then you transition to the sentences, and then you transition to the concepts, and then you transition to the whole book. And that's the progression of a reader. It's the progression of a trader. And that's really the way that I look at this. So no, I don't get stressed. And I look at those levels and I identify those levels. And that's the thing. I had a plan. I wrote out what my plan was. You guys saw let me just pull it up again. Okay, so currently inside an intermediate range, price is gapped out of value of this range and into an upper composite area, hovering around the composite low, gapping out of a prior inside day, hammerish candle with volume below average. The upper profile demonstrates a 3-day P profile, suggesting longer term sellers were present up there, as well as short coverings versus buyers. So I knew that that's kind of what I was expecting or what I saw up there. And my plan was, if a move back into prior value, with a move back into prior value, there is an expectation to retest the composite point of control. It didn't hold. My second trade idea was an inability to hold value, expected move back to prior value. That was it. That was my trade idea. I executed on the plan. And that was all based on just watching some candles. And it's really about the price action, seeing the selling that's coming in and the type of selling, and recognizing who are the people that are interacting here. Because I tell you, the only time you're going to get a great big giant move in one direction is when all time frames are working in conjunction with each other. And that means your long-term buyers, your short-term buyers, your intraday buyers are all on the same page. Otherwise, and vice versa for selling. If you've got long-term sellers, short-term sellers, and intraday sellers, all of those are on boards. That's when you're going to get these big, huge moves in one direction, because everybody is in consensus at that point for the move. But this right now, this is an intraday move inside of a consolidation. So you don't have long-term people that are involved in buying or accumulating at this particular state right now. Maybe they're accumulating small money or small accounts or small sizes right now, but they want to accumulate down at that point of control, and they want to take time to build it, but they're not interested in it going anywhere at this particular time. So they're not ready to move the market. And so you've got some that are bullish, some that are bearish, some that are bullish, some that are bearish, all on different time frames. And that's what creates these consolidation zones. Okay.
Wow. This is, people are writing both in Danish and English that the minds are blown here. This is to sticking with the book analogy. This is like a whole new category of books for many of us. Looking at the charts like this is truly inspiring. And I know that we are gonna dig deep into this and really see if we can use some of your knowledge here and get success out of it. I mean, it's it's truly inspiring, and we might show up on your next mentor group or something like that when we realize we can't get it all from just listening to this video and watching it over and over again. So
well, just remember, because one of the biggest mistakes that traders make is taking this profile and then thinking, oh, it's easy, I'll just buy here, buy there, sell there, sell there, and they just start randomly buying off of these levels, and they're taking the shortcut. And again, this is not, you really have to change your mindset in how you trade. You cannot, I don't think you can be a technical trader and trade the profile. I think that you can understand technicals, but you need to move the technicals aside, because the technicals are they're a lagging indicator. They're a lagging way of doing things. So by the time you process information, it's already done. And this is something totally different. So you're getting in preemptive, and that's the time where it can be scary. That's the time where you can feel uncomfortable because you don't have the confirmation yet. You're looking for the confirmation later. But with understanding the context, you can build that confidence to know that there's a high probability of success, right?
Absolutely. Yep. And as Mons is writing in the chat, back trading is going to happen now. So yeah. So I think we've spent an hour now, and I know Peter would like to round this off, but I'm not sure if he's capable of doing that in the car right now. So I'll just go ahead and do it. Thank you very much, Tracy. It's been super inspiring, and I know we are really gonna see if we can nerd on this one in the future. And yeah, so it's been great. It's gonna go into our category of videos that we return to and watch over and over again for sure.
Wonderful. Well, I greatly appreciate the invite, and you guys are doing great out there, so keep it up.
Thank you very much.
All right. Thanks, guys. All right.
Bye bye.
Bye.